Welcome to another episode of Big Risk Energy. I'm your host, Roei Samuel. I'm a serial entrepreneur, having founded multiple businesses, including one that I scaled and sold to a gaming company in 2018. I've been an investor for the last 4 years. I'm super passionate about neurodiversity as a sufferer of ADHD and severe dyslexia myself. On this podcast, we talk to an amazing range of people, from actors to academics, investors to entrepreneurs, politicians, musicians, scientists, professional athletes, and everyone in between. And we talk to these people about risk. Risks they've taken in their lives, risks they've taken in their careers, when they pay off and when they don't. And on today's show, I'm blessed to be joined by the one and only Nick Telson. Nick is a serial entrepreneur, having founded, scaled, and exited DesignMyNight. He's currently the co-founder of Trumpet and a serial angel investor himself, having invested in over 50 early stage companies. Nick, thank you for coming on the show.
Thank you for having me. Delighted to be here.
Great. So fascinating. You started your career climbing the corporate ladder.
Yes.
And then you quit, gave it all in to go all in on building DesignMyNight.
Yeah.
Is that the beginning of your journey with risk, or is there more to the story than people know?
I think I've always had risk around me. So my dad founded his own business. So he would just call himself a businessman, not a entrepreneur. So ever since I can remember, Dad has had his own businesses. So I would see him leave at 6 a.m, come back at 8 p.m. In the summer holidays, I would go into the office and be annoying and run around the office and stuff. So I think I've always had that around me. And I've never seen my parents have traditional jobs. Mm-hmm. So that was almost normal for me. So I think there was that element inbred into me. And Dad loved it. So I got the balance of how hard it is, and how hard he worked to give us what we've had. So yeah, I think that was definitely the start for me. But then I think it being in corporate, I really enjoyed it. I would never speak ill of corporate. I worked at L'Oreal, which is a fun corporate. So it was very buzzy, great energy in the office. You're working with great brands that people know. But yeah, you can get quite stale, I think, quite quickly. And I think that's what I saw as I was climbing the ladder at L'Oreal. I was just well, where do I go next? It's a general manager or something. And actually all they do is just doing reports and reporting back to Paris because we're in the London office. So that for me was I could just stay here for 30 years and have a great career, I'm sure, and enjoy it. But it wouldn't be the vibe, the energy that I really wanted. Which is interesting because so many entrepreneurs I speak to, if you're of that psychological type where you want that risk, you want that drive, you want that almost the adrenaline of building a business, actually staying in the corporate career, that's the risk in many ways, right? You miss out on that other side of the things that you're really passionate about. Yeah. I think, that's a really good point. And look, it's definitely horses for courses, but I would always promote working in a corporate first. So I think, I meet tons of founders now, really young ones, which, I'm a big advocate of, but their first job is almost, I'm going to be a founder. Mm-hmm. And that's a big leap to take, huge admiration. But I also felt that I really learnt my ropes of business in a corporate, managing. So I managed a team there, and I learned from great managers at L'Oreal as well, a few that are really good friends of mine still to this day. I learned how to manage a P&L. I learned how to manage just a budget and marketing spend and all of those things that people might think are dull, but actually to be a good founder, you've got to have all the, the craziness around you, but if you can have a grounding in some form of business as well, I think it does really help. That's really, really interesting because I do see that a lot of first-time founders now, they feel the burden of what they see as the extracurricular parts of being a founder, i.e. reporting, all the things that actually keep you really on track, keep transparency at the core of what you're doing, build great relationships with shareholders. Actually, those are the sorts of skills you learn in corporates, right? Getting buy-in from every stakeholder, and it's actually, it's a really interesting one. I've actually never thought about it that way. And I actually really enjoy that side of being a founder. So I'm awful at maths. So you say you're severely dyslexic. I genuinely think I have maths dyslexia, which is dyscalculia. I literally can't add up past my fingers. I just freak out with numbers. So I always shied away from that, but actually, obviously, I can use Excel very well to counteract that. So I learned that at L'Oreal to like manage big budgets and use Excel brilliantly. So then when you bring that into like the founder side of things, I actually now really enjoy sitting down with the financial model and actually forecasting and plugging in numbers and being realistic and not getting carried away. And you can keep that to yourself as well, and just playing with the numbers. And I really enjoy with Roei, our co-founder at Trumpet, putting together our investor update. I just find all of that actually that is the vision and strategy. Like, vision and strategy isn't just coming up with great ideas. The vision and strategy is actually what grounds the business. And I actually just really enjoy putting all of that together because it just makes me sort of recalibrate myself.
Yeah, and it's a really good point, because one of and I'm sure this attributes to a lot of the success that you've had, is speaking to so many angel investors, and even if just anecdotally rather than doing hardcore analysis on this, the success rate of companies who are good at reporting, who are on top of these things, is just immaculate. It's just amazing compared to your more traditional mad scientist entrepreneur who doesn't care about those things. Like, you really see a difference in the success rate.
100, and it pains me with my investments if they don't send a monthly update.
Yeah.
For me, there's no excuse, and it's not just to satiate the investors. It's actually because it just gives you that hour. Yeah. It doesn't have to be a thesis, but it just gives you that hour just to actually look at the numbers, think about the numbers, what's going well, what's not, but then also asking for things.
Exactly.
So I say, like, you've got investors around you. No, I'm not thinking about your business 24/7, but that email will make me trigger and be like, oh, actually, yeah, I can intro to them, and them. So for me, there's no excuse.
Yeah.
It's just bad practice as well.
Yeah, definitely. And I don't know about you, because I was also very good at investor reporting the first time round. And it was only when I started investing in other founders where I realized, oh, actually not everyone is as good at that. You learn the hard way when you write a 75K check and get no transparency into what's going on, right? So that's a really, really interesting one. But another key point you make there is, no early stage investor expects a founder to have it figured out. No. I want the transparency because I want to help, especially if I've invested, right? I want to be able to help. So I think it's, I've heard you speak about that a lot before, and I think it's great that you're spreading that message, because ultimately, especially with the economic downturn that we have right now, founders have got to pull every string they can, every lever they have access to try and get additional help, introductions, resources, whatever it might be. So it's, I think, now more important than ever.
And once, whether it's a VC or an angel, once they've invested, they can't take their money back. So you might as well just be open. Yeah, exactly. So you might as well be open and just be like, well, actually, we're really struggling on these two areas. Can we have like a session, or does anyone have any advice, or can intro to me anyone? So there's no point like pulling the wool over investors' eyes and then just carrying on. Like, once you've taken their money, they're there to make it a success with you. So it just blows my mind that people just don't use that network that they've already got in their business more.
Now, especially in time where inevitably there's going to be down rounds, there's going to be people coming back to internal investors to re-up, as it were, not paying your investors. Maybe respect's the wrong word, but not taking them on the journey with you.
Yeah.
And then knocking on the door saying, I know you haven't heard from me in 6 months, but we need cash, Yeah,
I just don't understand it. And I understand that founders are really busy and they might see that like an investor update is a chore. But, I've always said to the ones I invest in, if you want me to show you like a really light investor update, for me, it's just like your top line figures, and then you can literally just do what's going well, what's not going well, what's in the shit, a few bullet points on each. Like, if that's all you need to send, and an ask, I'm like, put an ask at the top of your email, because if they don't read your email, and they'll read the ask at least. So just ask, what you want. And we do that with Trumpet, and every ask we get replies. And I just don't know why people say that.
Yeah, so we will end up doing this whole episode on angel investing. So I want to go back to a point you made really right at the start. Yeah. And again, it's another one which I see with lots of entrepreneurs that I speak to is coming from a family of entrepreneurs. For some people, it's a real turn-off. Like for myself, my dad was an entrepreneur and varied success. He lost everything when I was 7. We had a couple years. My mum got ill. We had a couple years where we had no income whatsoever. And I was certain I wouldn't be an entrepreneur because seeing that pain, I didn't want to do that and what it put my family through and everything else, but inevitably got drawn to it. Did you ever have with the pain, the hard work, the stress, all that side of it, did you ever have any of those concerns going into becoming a founder?
I think we actually went into DesignMyNight quite blind. So we were early mid-20s. There wasn't all the noise around entrepreneurship sort of back then. It was a while back now. And on LinkedIn and all that, there was just nothing really. So sort of taking a leap into the dark, apart from just seeing what my dad was doing. And although it was there for me, like at uni, so Andrew, who's my co-founder in DesignMyNight, is my best mate from uni. He always wanted to do his own thing. So at uni, we would always talk about him doing his own thing. And in my mind, I was like, oh no, I could see myself just being at a corporate and working my way up and being like a country manager or something. So it was in me, but I never had that burning desire to do it. And it was actually when we ideated on DesignMyNight, we happened to be incredibly drunk that night as well in New York.
Nice. It was a great origin story.
It was a good origin, and I actually took him back to that restaurant for his stag do.
Nice. Which restaurant was it?
Benny's Burritos in Greenwich Village.
Okay.
They do the strongest margarita. Like, honestly, we fell off our chair. Like, we were just wasted. We were like, they must have had something else in.
Well, whatever they put in those drinks, it worked.
It worked. And then I think we just got the buzz. So like, when you come up with the idea, and then like the next day we were like Googling stuff to do in London and saw like Time Out. And then we're like, oh, there's not actually that much. Maybe we can roll with it. And then I think I just got swept away with it. If I would have known how hard it was going to be, I don't know if I would have actually,
interesting,
not knowing the output, because I'm super pleased how it all went, but if I just would have known how hard it was going to be, maybe I wouldn't have gone into it so willingly.
That's a really great point, and it's one of the things which I think you talk about the LinkedIn entrepreneurial culture, and now being a founder is, as much an identity, as much a trend as anything.
Yeah.
And I think it's a really important point to talk about is when you can't see the outcome, and very few of us do get the outcome, right? How tough that slog is, and it shouldn't be for everyone. It shouldn't be glamorized, and people shouldn't feel the pressure that they have to go through that journey, because it is brutal.
Yeah, and that's what I say to people. Like, it's definitely not for everyone, and it's incredibly hard work. I also say, like, the people around you have to be ready for so loved ones, family, friends have to understand the journey you're about to go on as well. It's, all consuming, and you can slag off hustle porn and all of that stuff, but that's the reality.
It's the reality.
Like, if you want to grow a business, at least the first 3 years, you have to literally put everything in, and you are going to be working evenings, and you are going to be weekends, and you're going to be on holiday, and you won't be able to switch off. And for me, actually, they make the great founders. Like, you have to, I think, be addicted to it, but also because you enjoy it.
Yes.
So like, it's almost like a sadomasochistic thing.
Absolutely.
You sort of love it and hate it at the same time, and it is a bit of an addiction, which is why we're going again. But it's definitely not for everyone.
I'm so glad you said that. I've said founders are masochists so many times, but you are right. And I don't want to go back to investor reporting, but again, it's with founders who are obsessed with their business, they love doing that monthly, like looking into everything. So I totally see that. So tell me, okay, so you've left L'Oreal, you're starting to build DesignMyNight. How quickly did you realize you guys were into something which was going to go scale, exit? Was it pretty clear sailing? Must have been lots of bumps on the journey.
Yeah, it was slow. So back then, angel investing and all of that wasn't as big a thing. We weren't connected at all, so didn't really know about VCs. So it was just slow. We had like interns. So it was a really slow, probably like year and a half, where we saw traction in the B2C side, and people that were using DesignMyNight really enjoyed it, and there was some viral loops going on about people talking about DesignMyNight, but it by no means did that. And actually, not until we did the software, when we half pivoted, because we kept obviously the B2C side, into software, did the business take off. If we wouldn't have pivoted, DesignMyNight would have died. So
it's really it's a great model though. When I look at like OpenTable and they did something similar, right?
Yeah.
They realized it didn't work immediately as a marketplace, so they had the critical mass. They built SaaS enablement for restaurants to do table bookings, right? I think it's a really amazing way of doing it. And the fact that you guys did it basically bootstrapped is insane. So huge well done.
Thank you. Yeah, look, and I think doing it bootstrapped enables you or forces you to just focus on the revenue levers. So like everything we spent, everyone we hired, we were really like laser focused on, is this going to deliver revenue and quickly? You didn't really have time to play the long game and be like, oh, well, if we spend, $500,000 on marketing, we'll see the results in like 8 months or something. Like we had to make sure that every person we hired was going to bring value to the business. And I think that just gave the whole company like incredible laser focus, amazing output, because we didn't have any slackers. Everyone was just like fired up to make DesignMyNight work.
Very cool, very, very cool. So it takes me to a train of thought around you as an angel investor, because obviously you've bootstrapped a company to an amazing result. You've invested in a ton of companies. Do you ever see a company and just sort of think, you guys could bootstrap this? There's no need, or is it more an opportunistic? You could, but I want to get in. Like, how do you see it now? Because I think when you've come from that scarcity of cash causing laser focus and seeing how good an outcome that can bring. Yeah. Now, obviously, especially in 2021, when you've got just the most ludicrous amounts of money flowing around, like how do you feel about that, and how does that impact the way you invest?
I think, well, look, there's no right and no wrong. So I say that to all founders, like people that admire what we do. So bootstrapping doesn't mean that's the right way to do it necessarily for your business. And Trumpet, we've raised a VC round pre-product, pre-revenue. So totally different model to design, because that was right for Trumpet. I would never, and whenever I invest or meet the founders, I take my investor hat off as well. So I always try and give the founder advice first, if I think that will benefit them versus me as an investor. Sometimes I'll say a big dilemma I get founders come to me is they aren't really developed enough, but in their mind they want to raise like $1 million round. Yeah. So what I say to tons of founders is, well, why don't you do 150K at a reasonable valuation rather than having 1,000 meetings to get this valuation you're not going to get. And then let's just start to build the business with 150K. Let's get some traction, let's get some revenue. And that, everyone's so focused on like the YC formula, and it's like, okay, well, I've got to do my pre-seed, my seed, my Series A. Like, it doesn't have to be like that. Yeah. So just take a bit of cash, whether that's from angel, well, it will be from angels, and then just start to grow the business, and then we can see where we are. Yeah. So it's sort of like bootstrapped plus is something that I promote a lot to founders until they're ready to then raise a bigger round, a more sensible valuation, which is what people are going to have to do for the next couple of years anyway, because you're not going to get your stupid valuations.
And I think it's actually the right way, especially in the UK. Yeah. We're not geared up for the same funding environment in the US. I was just out in the US for 2 months. The amount of VCs who are they won't invest unless a founding team retains 75% plus going into Series A. Whereas, in the UK, that's just not the reality for most businesses who get to venture backstage. It happens, but it's not very, very often that does happen. It's that, I call it, always on fundraising. It's, smaller ticket, especially with so many amazing instruments like advanced subscription agreements. Like, it's so easy to do now. SPV, syndication tools which are out there. Founders have got so much more now than you did in 2020, I did in 2013, that there is really no reason to be pursuing these mega rounds where for 99% of people, you're going to be spending your whole time fundraising and just not justifying that vow and raising that load of capital.
I think that's a great point. The tools that are available now, you almost just need like one or two evangelists. Like there's actually a company in America, which I won't go into because I'm going to talk about the funding, which I'm an investor in and I adore, and they're doing amazingly. And he was doing like a little bridge round, and I actually said to him, can I do an SPV? Yeah. And let me fundraise for you, and you know, I take my cut from the investors, not you. And because I just totally believe in the business, I just did an SPV and like raised like 300 grand. He didn't have to do anything because I was the evangelist for him, and because I believe in it so much, I think I'll get my payback for that when he does amazingly. So. There's so many vehicles. You just need, whether it's a mentor or an angel that don't go to them for money straight away, go to them for advice and like build up a relationship. And if you can get a couple of people just believing in your business, as you say, there's so many vehicles now to raise money quicker and smaller, and just keep doing that.
Exactly that. So now that we're in this economic crisis, downturn, whatever you want to call it, is that changing the way that you view risk? For your investments and for your own company?
That's a good question. So it's obviously about risk. So when I exited DesignMyNight, the first thing I did was went to an independent financial advisor, and I said to her, I want to map out my financial future with you. So I want to invest in X, Y, Z, different asset classes. Can we map it out? Let's see what's sensible, what's not. The first thing they do, obviously, as an IFA, is they give you a risk assessment. And I think I was like 9.5 out of 10. So she was like, I can tell you're a founder, you thrive off risk. And I think that 9.5 was also like, you accept if things go wrong because you get the thrill of the risk. So like if I lost everything, I'd be crushed, but if I lose an investment or something, I can sort of just wipe it off because that was the high risk that I went for. And then I reached out to her probably like a few months ago. I said, can we just remap stuff? She said, yeah. She's like, I'm going to give you the risk thing again. And it had come down to, I think, 6.8.
Right, okay, sign of the times.
So she was like, very interesting. I was like, we had like a psychiatry session with her. She was like, okay, wow. She was like, that's still moderate to high in most people. Like some people come out as like 3. But she said, okay, why? Like, why is you? And I was just like, well, look, I have lost stuff and the stock market's crashed and investments haven't worked.
Into crypto at all?
I did a bit of crypto, but not big, luckily, which I'm just sort of ignoring for 10 years anyway. So a lot of my sort of assets, let's say, are hugely down at the moment, and not something I'm freaking out about, but you've just got to ride it out for a few years. So I think maybe when you get burnt on a mass scale and you just hear doom and gloom around you, maybe that lowers your risk profile. But also, angels have cycles of investing as well.
Absolutely.
Like, unless you're super wealthy and you've just got this pot of money you can keep pushing out, I've now 58 investments. So I'm at a point now where I'm like, okay, let's just stop and let's see if any win before we just keep adding to it. So I'm also sort of a bit of a end of my current cycle and just going to sit and just see probably for the next at least, I think, 6 months at least, and just see how all of my investments sort of pan out.
It's a really, really good point, and it actually goes back to what we're talking about with a lot of these syndication tools. One of the things that I've seen, and something that I've been doing recently as well, is because, as much as a founder wants to tell you it's a 3 to 5 year exit, the time horizon, for the most part, is much longer than that. So because of the syndication tools that are available, I'm finding a lot more angels in my network, a lot more angels that I know, are actually investing at a later stage because they're able to, because they're doing it through a syndicate and through a nominee structure to obviously increase the time horizon for an exit event. And I actually think that's also one of the risks for early stage founders right now, is the accessibility of later stage rounds, especially when you've got tier 1 VCs sitting on their hands a bit more and that deal flow trickling down to wider availability. I think that could be a really tricky thing for founders, but it's a good thing for investors if I'm able to invest in a Series A, a Series B, and get closer to the start of a new cycle. So it does catch up, but it's an interesting trend I'm seeing.
I feel, I have this discussion actually. I was having it the other day with another investor. Syndicates are great, and I'm in some awesome syndicates. I see some great deals, and a syndicate's great because you can put in like a 3, 4, 5 grand check. But my personal take on when I invest in a syndicate is because I'm putting in such a small amount, I want that to be 100x.
Yeah.
Otherwise, it's just pointless. For me, and this sounds very, what's the word? Privileged for me to be able to say, but for me to put in 2 grand and all the risk that still comes with that, most will fail, and just to get a 10x return off that, it doesn't feel like a risk worth taking.
Interesting.
So if I'm looking at a syndicate and it's later stage and it's at like a 20 mil valuation and it's doing well, in my head I'm like, can this be a unicorn? And if it can't be a unicorn, it's just not worth it. And I might regret it, or I might see it doing well, but still, even if I see it doing well, that 2 grand might turn into 20 grand. And you're like, well, actually, that amount of risk that you put in a startup that it's not yours, I could probably make that 2 grand turn into 20 grand somewhere else where I'm in control of. So actually, I still, when I invest in syndicates, still like really early stage. And let's get in sub 5. And then actually, if we turn this into like 100 million rather than a unicorn, then we'll get serious returns.
So that's fascinating. So, and correct me if I'm wrong here, so you do look at investing in businesses which may not have unicorn potential, and therefore, are you coaching those founders? Because this is something I found previously. I just invested in something the other day. Love the founder. It's a marketplace helping people shop sustainably called Greener. Really love the guy. Like met loads of times. He's ex-Greenpeace. If there's anyone who will live, fight, and die to try and solve this problem, it's going to be this guy, right? He's awesome. I don't know if it's necessarily going to be a unicorn, but I am very, very, conscious of that, and I've done that for different reasons. And it's not the first time I've done that. But one of the things I find quite difficult advising those founders on is understanding that they need to look at different routes of funding or different routes of scaling than going for venture capital, because if you're not going for 3 billion, you're just barking up the wrong tree. So does that influence the way that you invest as well? And do you have those conversations with your founders, guiding them that way too?
Yeah, definitely. Like the first thing I normally say to founders that I'm close to, that I've invested in, once they've got the cash in the bank, I'm like, okay, forget all the BS you've been telling us and all that to raise the money. Like, what does a good outcome look like for you? Like, is it £5 million in your bank account and financial freedom or whatever? Well, if that is yes, then actually you only need to sell for 40 million, whatever. And then as an investor, if I've come in at a 2 million valuation, actually you selling at 40 million is a very nice thing, because I've put in a bigger check because it's not a syndicate. So I'm like, well, if we can get 20x of this as an investor, we're very happy. You've got 5 million quid in your back pocket, you'll be very happy. So I think that's so important, because it just shapes the journey that you go on. So that's one of the first conversations I will have. And if I'm backing early stage, I'm definitely not backing that they'll become a unicorn, 100% not.
And this is why I think it's so great having ex-operators as investors, because ultimately know what it's like, know that smaller exits are attainable, which can be totally life-changing, versus, I think in the UK it's something like 90+% of VCs have never operated in a VC, and they don't have that way of thinking about it. And that's what I think is so awesome in what you do, in terms of using that experience to actually say, well, look, there are, and things like micro-acquire now, making it even more achievable. So I think it's such an exciting time to be a founder. There's so many great options out there, and if the positive outcome of the downturn right now in investing is that people realize it doesn't need to be what LinkedIn told you it should be 2 years ago, that's actually not a bad thing.
It's back to like the bones. It's like, build a business. If you want, you don't have to become a famous ego-driven founder. You don't have to be in TechCrunch. You don't have to be a unicorn, but you can have an awesome journey. You can have a totally life-changing sum of money for you and your family, selling for 50 million quid or even 30 million quid, like if you keep enough equity. So Yeah, I think I advise that to a lot of my founders. And don't forget, as an angel investor, you're probably looking at secondaries further and further down the line because you're going to get screwed if it gets,
which is something which more angels need to realise as well.
5 VCs later and it's on the path to unicorn. Ironically, the angel who backed them right at the start will get screwed over. So actually, when they start hitting like 100 mil plus valuations, as an angel, you should be thinking, oh, okay, maybe I'll say thanks.
Let's take the discount and go.
Yeah.
Interesting. Okay. So Nick, I've got a few questions for you, which I'd love to ask. So one is there any specific risk that you've taken that stands out to you as, that was a huge risk, and what was the outcome of that?
Oh, I think jumping ship from corporate, which sort of none of my friends or family could understand. They were like, what are you doing? So that was a big risk, but it worked out well. I think our pivot to software was a huge risk. So we had to totally change our strategy. We had to, unfortunately, get rid of a lot of the team because it was a very content-led team, and then we had to pivot to like more devs and customer success and become a SaaS business. So that was a huge risk, which paid off, luckily. We did one that didn't pay off, which was we tried to build a subset called DesignMyNight deals when Groupon was getting big.
Right.
And we were still pretty early stage, pre-software. And we were like, well, let's build a Groupon for going out, essentially. So we'll do a deal with a bar that you get a £4 cocktail instead of 12 quid. And if we sell 100 of those, that activates the deal. And we spent a lot of our money on that. We for some stupid reason, we built that software as well. And it just didn't work because we weren't big enough. So obviously Groupon have like millions on their mailing list. We were still very small. So it just didn't take off. So that was a huge risk financially and a pivot of the business that didn't work. But I think what we did well was we just cut it quickly. We were like, this is not going to work. Okay, the money's gone, whatever, let's move on and get going again. So I think that's quite important. If you take big risks and they fail, know when it's failing and readjust very quickly.
That's really, really great advice. And I think it's also something that we're seeing in the market right now. It's the importance of monetization at an early stage, because it does give you the time to take those risks, and you still need to act quickly, but it does allow, if your bread and butter is working, it allows you to be a bit more exploratory. So that's I actually had no idea about the DesignMyNight deals.
Most people did. Yeah. It was so quick and brief, an early stage that, it came and went pretty quickly.
Fantastic. Okay, so my next question for you is there anything that stands out to you which you wish you'd done differently in this journey?
I think for us, the biggest mistake that we're not doing with Trumpet that we've learned from was micromanaging the business, not necessarily the people, but Andrew and I were so ingrained in everything. And DesignMyNight grew, we had the B2C arm, we then built 3 bits of SaaS. We had 3 SaaS products and the big B2C arm, a team for each different part of that as well. And we were product managers, we were working with dev, we were looking at customer support tickets, we were working with our finance girl to keep on top of all the finance. We were just in everything. And it just wasn't a healthy way to operate, probably for our team and for us. And when Access bought us, that was one of the first things they said was, we need to detangle you from this business. We've got a 2-year earn out, but you need to start lifting everyone else up, giving them responsibility and trusting them. And we had such an awesome team, and we did trust them. I think we just, because it was our first one, we were just so in everything. And Trumpet, we're taking a very different tack, that we're just hiring rock stars to get on with it. I was talking to you before about hiring someone in marketing and just letting them just get on with it and just checking in with us, but us not checking in on them all the time. So we've learned from that, and I think that would be a lot more freeing as well as founders.
It's more incredible advice. It's never easy to let go, but you've got to, right?
Yeah.
And it's one of the things you learn when you're going through that integration after the exit, it's like you were like, wow, I didn't actually realize how entrenched I was, right? Sometimes it's just
and it can work without us, and probably better.
Yeah, which is nice. And do you find that's actually going to help you have more balance maybe this time around?
Definitely. It just gives you a bit more clarity. It makes you less anxious. You know, I every time I was out, and obviously DesignMyNight was a 24/7 business. If our booking software went down during dinner service, we were screwed. So I had alarms on for different bits of the software that would go down. So if my phone vibrated and I was at dinner with mates, I'd be like, shit, Collins is down. But it was just like my mum phoning me. But I just had this constant anxiety that every time my phone vibrated, it was bad news. So it's just not healthy. And that's why you've got a dev team, and that's why you've got an on-call team. It doesn't have to be the founder the whole time.
Yeah, absolutely. That founder anxiety is very real.
Yeah.
The very first 2 years, anytime someone calls you unexpectedly, everything's over. It's all burnt down. Yeah, exactly. Okay, nice. And out of interest, just a side tangent here. So, you talk about their sacrifices. You talk about being always on for so long. I mean, what impact did that have on people around you? Because with Real Sport, I went from 20 close mates to 3, who are now my 3 best mates, don't get me wrong, but similar sort of, straight out of corporate, you've got such a social life, everything else.
Yeah, I'm lucky, like I've got an awesome group of mates, like still both from school and uni, so I think eventually they just got excited by like the journey we're going on. DesignMyNight helps. Like it's a very fun, from the outside, it's a very fun business. So like we were getting messages all the time, like where can I go out? Can you book us into here? So we sort of became like an auxiliary for friends as well. So they were all very understanding, and I was lucky to keep them. But yeah, loved ones, partners, family, I'm very close to my family, but they just had to realize that actually this had to be my priority for a certain time. And I was lucky, I think everyone did understand, but yeah, it was more of a self-mental thing, because I was just like locked in your own sort of DesignMyNight prison. And that's actually one of my biggest regrets looking back, is I sort of missed my mid-20s to early 30s. And again, we were discussing, I go to Ibiza now once a year, and that's
trying to recapture
I'm
those
reliving
20s, yeah.
my youth. And I'm like, and I love it. And at the same time, I feel a bit sad sometimes, because I'm like, I should have been doing that in my 20s. So I'm sort of trying to make up for it now, but not being like a creepy old person in a club.
But it's fascinating, because I literally had Dan Bowyer on the last podcast before, and he was talking about how he lived his whole 20s with just the experiences and wished he'd started earlier, right? So grass is always greener, isn't it?
That's true. That is true.
So what are you proudest of in your journey so far?
I think it was when, this is genuine, when we exited, most of the team had options. And those meetings, like we obviously said, you couldn't tell the team until like the day before it was actually happening. So we told the team, everyone was very excited, a bit worried about what was coming next, but we dealt with that. But then the next day, we pulled everyone who had shares into a meeting room, one-on-one, and we were literally just like, remember those things I talked about 5 years ago? Well, tomorrow you're going to have 250 grand in your bank account. And like people were just like crying, hugging. Even when we said we exited, I just don't think they realised. And a lot of people didn't realise what the options were. And it was just an outpouring of emotion, because it was just like, from us to them, like, thank you so much for trusting us. And a lot of our team stayed for a lot of the journey. We were very lucky. So just those meetings, and Andrew and I still talk about it, like that day when we just sat everyone down. And even someone that got like 15 grand, just to get 15 grand cash for doing a job they enjoy, were just like amazing. So I think that was like a real landmark moment when we exited, more than like the money landing in our account. We just really enjoyed that.
Love that. Okay, what does it take to be successful?
Yeah, contrary to what's trendy, I would say, like, you have to be like single-minded, borderline obsessed with your business. I can only talk about success in business. I think you have to you have to be ready to give everything that you've got and know that it will probably be for at least 3 years. And it's fine for some people just not to be cut out to do that. But I think it's unrealistic if you go into a startup without knowing how hard it's going to be and believe all the other more like trendy advice on, stop at 5 and have some you time, because it's just not the reality. So one of the big bits of advice that I give, and I think only certain people can do this though, is to keep yourself on an even keel. So I find myself emotionally, I never got too high at DesignMyNight. And at the same time, I never got too low. So, and we had plenty of lows, but Andrew and I were very good at like, okay, that's happened, let's just move on. Like, okay, we'll dwell on it tonight and then tomorrow it's gone. The same when we had success, we were like, great, tick, high five, what's next? So we kept ourselves doing that rather than that. And I think if you can take out that emotional roller coaster from your journey, that will sort of stabilize you a lot more. Very hard to do, but if you can somehow find that center and just try and stick to that line as much as possible and pull yourself back if you do either or either, that's a great trait to be able to do.
It's an amazing answer, first of all, and so great to hear. And it's one of the things I always am fascinated by is how similar founders are to actors, comedians, professional athletes, in that it's that all-in mentality, dealing with the ups and downs. And when I was running Real Sport, we were working with Houston Rockets, and I was talking to one of the players at the time, and their season's 82 games long. So he was saying, like, the way they keep their mentality is, even when you have a big win, it's like, next game's around the corner. Big loss, next game's around the corner. So it's fascinating how many similarities there are, because I think it's that sacrifice, being all in, managing your own mentality, keeping yourself on that even keel. So yeah, super interesting to hear it from you. Nick, my last question for you is, you sitting here, if yourself as a 15-year-old man, teenager, 15-year-old teenager, man, boy, I don't know, walks in, what are you telling him?
I think on a more personal level, so I came out really late, which is probably the biggest regret in my life. So I would tell the younger me, just, you're great who you are, just be who you are, be who you want to be, and your friends and family will love you for that. So yeah, without getting too deep, I think that's like the one main regret I've got. And again, I feel like I missed out part of my life, especially at uni, like just not, whether it was coming to terms with it or having the courage, I would just, tell myself that it's fine. You should just do it and it'll be fine. And that, I try and help a lot of sort of LGBT plus founders now. That's like a passion of mine, because again, quite underrepresented. It's not like a visual underrepresentation, so it's not often talked about. Obviously you've got founders of color and female founders, all extremely important, of course. But there's lots of people in that community as well that don't feel comfortable to be who they are because they don't think they'll get investment, or even to their team. So I'm trying to be a bit of a voice now for that community as well in the founder world.
Nick, that's awesome. Thank you so much for sharing. Thanks so much for coming on the show. It's been an absolute pleasure.
Thank you so much for having me.